Oh man, lots of hurdles. I think when we started in early 2021, there might have been like 15 other teams trying to do options at the time. And maybe like one other one that's still around from those days. It was really, really hard to do. It was difficult to do at the time, especially with the technical constraints. We were trying to build products. I think we were the first team to actually launch on an L2 natively in the entirety of crypto.
Welcome to another compelling episode of World Ledger with Coco Kee. This is your gateway to fresh global perspectives and insightful discussions. Whether you're a curious mind, a global citizen, or a lifelong learner, you're in the right place to discover how blockchain innovation is shaping the world beyond your borders. Everything on this podcast is for informational and educational purposes only. It represents personal views and opinions and does not constitute investment or financial advice or recommendations.
Great to have you. Before we talk about Derive and other topics, I want to learn more about you. You worked with traditional trading powerhouses. What inspired the change to start a decentralized exchange?
I was at a firm called Susquehanna. They're one of the largest market makers for options in the US. I was there for 4 years trading on that desk. I had always been interested in crypto since 2016, really passively following developments, watching the infrastructure and the tech evolve. For me, it was quite clearly the way that finance was going to run in the future, even in 2021 when things were really far behind where they are now. That got me really excited. The ability to roll out financial technology at a much faster pace, create new products and democratize the access to markets that only a few firms have by building on an open, interoperable set of global rails, the on-chain environment. That's what drove me to jump in. It seemed like a great time and an opportunity to do it, and I haven't really looked back since.
Did you work out of Philadelphia?
Yeah, that's right. I was in Philly. Their headquarters is in suburban Philly, which surprises a lot of people, but it was a fun town. I enjoyed my time there.
You started 2021. That was sometime around pandemic, before or after?
For Derive, that's right. We kicked off like a year after the pandemic really set in.
Help me understand more about Derive and your aspirations for it. How different is it from Deribit? Because everybody in the industry knows Deribit, which is centralized exchange.
Yeah, for sure. We're the largest on-chain options derivatives exchange. We differ from Deribit in a few ways. The on-chain component lends itself to some really interesting use cases. The first being that we have the ability for users to participate in permissionless options strategies. So for example, selling options weekly as a strategy or performing the basis trade. And that's all done algorithmically with on-chain guarantees around the quality of execution. So people can get automation out of the box with the guardrails and the certainty of being on-chain. I think the second thing is we have a number of different collaterals that are much more on-chain native that you can use to come and trade. So we support SUSDE, which is Athena's yield-bearing bond type instrument, as well as WEE from EtherFi or Lombard's Bitcoin. And we build trades and vaults on top of those products too. We enable a lot of these yield-bearing collaterals with functionality that they can't get anywhere else. We're also starting to roll out a whole host of other things that users can do on Derive that they really can't do anywhere else because we have an integrated borrow-lend market, perps market, and options market all on itself. It's really becoming and evolving into this payoff factory, how I like to describe it. If you want to build a trade or a structure or a vault, you can do that on Derive with a really expressive array of financial instruments and products. Our goal this year is to become the most integratable exchange in the world. So others can take all of these Lego blocks we're generating with deep liquidity and at scale and build products and businesses on top of those. We have the most expressive library of financial instruments to do that with. The on-chain component guarantees margin settlement and clearing is all on-chain. It means the rules of the game are there. They're written in smart contracts. People can observe them. They can see the state of the collateral and the margin in real time. They feel confident in being able to integrate with Derive and build products on top because it's not a simple API that can just be changed. The users on the platform as much as anyone else does. I think we have a clear path to start building out differentiated strategy and launching new products with the help of integrators and people coming on top of us this year. And that's the goal.
How did you put it off the ground, especially in the early days? What kind of hurdles did you have to jump to get to where you are today?
Oh man, lots of hurdles. I think when we started in early 2021, there might have been like 15 other teams trying to do options at the time. And maybe like one other one that's still around from those days. It was really, really hard to do. It was difficult to do at the time, especially with the technical constraints. We were trying to build products. I think we were the first team to actually launch on an L2 natively in the entirety of crypto. So for us, it's just really hard to build options products. They're really complicated, like mathematical instruments that require a lot of compute to get right. And so we struggled with the technical constraints of Ethereum L1 with gas super high back in 2021. And so that was one of our biggest hurdles, designing a mechanism to generate options that didn't cost $500 a transaction. That's what led to, we built an automated market maker at the beginning, worked surprisingly well. So it was AMM, totally algorithmically based. We have a very different model now that we have the ability to kind of run our own L2 and access an order of magnitude more compute. But it was very difficult technically. The market is still growing and quite small relative to where I think it's going in the next couple of years. But it's been that twin combination of technical difficulties up until really like a year ago when we started to become free of that. And then the size of the market, which is really now beginning to scale up a little bit.
You started with Ethereum Layer 1, and then you migrated to L2 optimistic. Is that right? Optimistic rollout?
We actually never even launched on mainnet on Ethereum. We were looking at it originally for a prototype design. I realized it was going to cost $500 a transaction. So we designed natively for L2, and we were one of the first teams out the gates on Optimism back in August 2021, I think.
Where did you find the programmers and coders to help you build out the platform?
It's a great question. The immediate initial was kind of some friends I knew who were into crypto, as well as really great programmers working in sort of FANG companies, some in SF, some in Australia. But our biggest source of talent, particularly around 2021, was through our Discord. It was early community members. Our head of engineering was a senior engineer at Apple doing iPhone speakers, hardware, software integration. And he was just a kind of like faceless Discord member back in 2021 saying smart things. And we got chatting with him. He started building some stuff and became our lead engineer. It was a really good funnel for us back then. I think it still is, because it naturally filters people who were excited enough to get involved and start chatting. About half our team, we have like a team of 14, 15, is sourced from Discord.
Amazing. I thought building on blockchain required some special techniques and some training, even you come from software background. Is it true, or it's not that hard to transition from developing for Apple to developing for Web3 project?
It is doable for sure. I would say it probably requires, like we've had people on our team who have experience developing smart contracts since 2017, 2016, so like quite early on in a relative sense now. It helps to have those people because it sets the culture of how to build. It is a different mindset. You can't move fast and break things with smart contracts. It needs to be very deliberate. It's more like infrastructure. In terms of the raw skills, yes, certainly they can be learned by just smart people, but it's the mindset of building infrastructure. You have to measure twice, cut once, and be very security minded when it comes to the design, simplifying as much as humanly possible the mechanisms you're trying to build, and then of course the code when you're actually writing the smart contracts.
I heard that the most difficult part is the mindset for developing Web3 projects. Were you able to raise some funds to launch this project?
Yeah, that's right. We did raise capital from some investors in the space. Framework led our seed round back in 2021. They're still close investors and friends of ours alongside a consortium of angels way back in 2021. We've definitely had some good investors in the past and still have good relationships with them. Although now we are significantly more distributed and decentralized than we were at the time, with a live token that's in the hands of a lot of the community now.
If you want to mention some competitors out there, whom would you name?
Honestly, I don't see us as having too many on-chain competitors. I would say we're looking to make inroads against the Deribits of the world. They've done a great job building a high-quality business. Options are a network effects game. Building liquidity is hard. It takes time, and it yields compounding advantages over time. You need to find strong wedges of differentiation against the incumbents if you're going to want to try and mount a challenge. So we're not looking at other teams on chain as a competitor. We're looking at the options market in general. We have those wedges in the form of alternative collaterals. We're looking at building OTC products this year that really starts to unify that market, which largely exists in bilateral legal world arrangements versus we think we can codify them in smart contracts, bring that market on chain, lead to better pricing for people who are trading OTC in crypto, which the market is pretty massive, and begin to build an ecosystem of on-chain native options flows this year. That's how we begin to compete and take market share away from Deribit, who do 85% of the options market at the moment.
I know Deribit has a huge market share of options market. What do you think of their potential acquisition by Coinbase? And then what will be your exit plan?
I wouldn't say we have an exit plan to answer that. We want to build a successful protocol and network and grow and see where things take us. But I think we have a real shot on goal to scale out and build foundational infrastructure for the next financial system, which is what we're trying to do. With respect to Deribit and Coinbase, I think it makes a lot of sense for Coinbase of the world. If you capture options markets and build liquidity there, it is one of the more defensible modes in crypto because it is much harder to migrate that sort of flow and liquidity versus a more one-dimensional instrument market, futures or perps or spot. I think it makes a lot of sense. We'll see if it goes through. I don't have any information on that, but I'm going to be watching it pretty closely. It could set off an arms race within the option space in crypto because a lot of people who haven't believed in the potential of options will realize how valuable of an asset and instrument they are.
For traders who never trade this kind of product, would it be easier for them to start with centralized exchange? Might be more difficult to try DEX to acquire new users. Would you go after those native crypto users and pull them into your exchange, or to grab the market share from the centralized exchanges?
Yeah, I think it's definitely a mix. I'm a little biased, but I would say we actually have the best UX for options in crypto in terms of the user interface. We have a new one that's about to go live, probably live by the time this goes out. More broadly, it's already in deep alpha testing with some of our power users called Derive Pro, which makes it extremely easy to customize and build advanced trader interfaces. We have a very intuitive options flow. I would say for us, that has been our appeal for on-chain native users who have found their way to us. We're continually trying to improve the onboarding step, which is already just a withdrawal to a Ethereum mainnet address that gets relayed to the L2 to really mimic and be as seamless as possible. We already have things like gasless transactions on the app itself, but there's still another level to go. Having said that, I definitely think the actual trading experience once capital is there is about as good as it gets. And we certainly are interested in expanding the market of people who trade options because I don't think the existing products or the centralized exchange products are very attractive to anyone who isn't an expert in options.
Do you target institutional, retail traders, pro traders, or large institutions?
A pretty good mix, I think, of all three. Some institutions, particularly on-chain native funds, a lot of sort of funds that have various mandates denominated in Bitcoin are very interested in trading on Derive because they maintain self-custody. They can use yield-bearing Bitcoin and Ethereum assets like Lombard's LBTC or ETHFI's WEETH or just staked ETH to come and trade and generate yield on options. We have a good chunk of family offices, hedge funds that are doing that on Derive, as well as a number of high net worth pro-tail style traders who are one-man shops but are really sophisticated and know what they're doing. They're kind of our power users. They're the ones testing the new products that we have and giving us feedback. That's a large contingent of the flow too. And then we have people who are just sort of dabbling in options, learning about them, trading in small size. But I would say they're probably like 20, 30% of the volume.
For someone like you trading TradFi options before, and now you're building DeFi derivative products, what tools you feel unique and helpful with the blockchain technology? And what is limitation that you try to overcome to build out Derive?
I think the advantages of being on chain are similar to the ones I stated before. We're building infrastructure that is maximally integratable from the perspective of ease of integration, the ability to reach into the toolbox that we built and build a basis trade product, covered call option strategy, or just a front end to trade options in a localized jurisdiction. We're making that process really easy. That's a function of having great tooling, great technology, the ability to margin settle and clear instantly using smart contracts. Smart contracts give you instant settlement, yield-bearing collateral, global rails, easy to integrate. Anyone who's deciding about how do I build my front end for trading options on crypto in India, or it's a yield generating strategy for high net worth individuals that you're pitching them and then settling and clearing on the back end. If you're trying to build that sort of product or business on a centralized exchange, you have no idea what's going on under the hood, who's getting preferential treatment, what the state of the system is. And you also have no idea if that's just going to change one day. I envision the future of Derive as being a high volume, low fee business where the market forces themselves keep that market power in check, even though you might have large network advantage. Now that the technology behind the DEX and on-chain onboarding experience, the scalability has gone to a level where we can compete with centralized alternatives one for one.
Those who have the chance to experience both centralized and decentralized, they might be able to appreciate the advantages that you mentioned. Easier for them just to make a call and pick which one they will go with. If you've never used either centralized or decentralized, it's very hard to tell. Can I allude to this conclusion?
Yeah, I think that's right. I also think we're headed in a world in which what Derive will be is not just like a exchange where you can come and click trade and make a trade. It's a backbone foundational infrastructure where there might be 100 Deribit style or Derive style interfaces, all using the same set of standards, having this interoperable global liquidity marketplace where thousands of people are using the same back-end stack to build businesses and generate flow. That sort of model hasn't been viable in the last 4 years because the tech hasn't been there, but that's changing. So I think we're going to start to see, not just in options, but across the board, like with Aave for lending or Morpho, Uniswap for swapping, lots of different front ends that are aggregating, building businesses on top, charging fees, and then distributing them to people globally at a much lower cost than what you get for similar products in the traditional system.
When it comes to financial products, the speed of execution is critical. I used to do FX trading and build a trading platform. When it comes to on-chain execution, will there be any challenge or delay? Do you see any type of challenge like this?
That's where we made an architecture design trade-off decision. We put the margin settlement and clearing rules for these derivatives on-chain. There are multiple potential order matching systems that can be built on top of that, which is how you get this model in the future. In this best case scenario where you have 100 different front ends, each tailored to local jurisdictions, trading options. You have an off-chain order book, which can compete with the central quick speed. And then the margin settlement clearing itself much faster and lower cost than the traditional system, which can take T+2, T+3, T+1, depending on what market you're in. So in my view, we actually do get this sort of blazing speed with that trade-off. And you have the multitude of front ends that are all competing on who can execute the fastest, the most trustlessly. It's that balance and the market structure that keeps things in check, whilst you have the most critical components with strong on-chain guarantees, where the collateral is actually stored, the self-custody. All of that remains true with the architecture that we have and we're continuing to build.
All the things that you are building are sitting on layer 2 of Ethereum. Does the layer 2 do all the work that you're talking about? It seems like it's pretty powerful.
Yeah, it's great. It means you can have an order of magnitude lower cost for users and abstract away the actual gas cost for users themselves. We've had that for a year and a half now in production. They keep getting better and better. I mean, there's an open debate in Ethereum right now about like where the balance of power should sit between L2s and L1s and how much capacity we need on L1. I definitely think there needs to be more activity on L1 and getting the balance right. Maybe it's shifted too much to L2s, but they are a great technology stack for people who want to run these high performance infrastructure or protocol style applications whilst retaining those benefits of self-custody, transparency, integratability.
Yeah, there are a lot of debates about Ethereum and how Ethereum Layer 1 can capture the value created on L2. I'm sure they will come up with some solutions one of these days. But it seems like Ethereum has done some great job. At least L2 has been utilized in lots of projects. That's very encouraging. So let's switch to AI. I saw that your platform is powered by AI. How does AI help Derive?
Yeah, I wouldn't say we're powered by AI, but we're certainly looking to integrate AI functionality as much as we can into both the user experience that ultimately it's part of this shift to be the most integratable exchange in the world. It will be a very friendly environment for people to come and build agents that potentially run strategies that take on all of these financial instruments and create payoff structures, rebalance between different strategies, whether it's short volatility, long tail insurance, long or short lending and borrowing. Whatever the strategy is, we want to create a toolbox. It's this maximally expressive environment for agents and these on-chain teams that are building and deploying agents that can act on behalf of people with real trading balances. We want to make that as easy and seamless as possible. With respect to the UX side, this Derive Pro rollout we're working on has a couple of AI features enabled. We are still working on attempting to find features that can really start to do these things for our users. It requires a big lift. It requires, more data, like better quality data. The bar is extremely high to ship a product that can actually touch funds because these models are still prone to hallucination. When you hallucinate with a trading stack that's quite bad, we're looking at rolling it out in phases and making things as useful as possible without necessarily giving people the full suite on day one until we're sure it's of high quality.
Many DeFi products, platforms like yours are not allowed in the US. It's a pity. So what will help bring you guys back to the US? And the question also is, does DEX or DeFi need regulations?
It's a sort of broad question, depends on the jurisdiction. My view of what we're trying to build in DeFi is a protocol, a set of rails that hopefully means someone can build a US regulated front end on top of the back end we built. What that needs from the US is a bill that deals with on-chain settlement, potentially using the blockchain as a alternative clearing system versus the options clearing corporation, for example. And that would be jurisdiction by jurisdiction over time, where you have a US front end for US and Australian front end for Aussie, and that's regulated in sort of local jurisdictions. The cool thing about that is it made it so much easier for people to come and build those products on top of what we built than it would be to build on top of the Australian Stock Exchange or SIBO, which are much older, difficult to access stacks. They require so much more integration and relationships. We're much more lightweight backend and stack for that. With respect to regulation, I do think regulation is important, but not to the degree that it can stifle competition and create oligopolies, which is what I think has happened globally for many different markets. And I think that's where the promise of on-chain really lies. It's making it much easier for this many to one style competition to develop. And so we'd be waiting for partners, waiting for that regulation to come through, to really come into the US where you can margin settle and clear on the blockchain, and potentially building the front end ourselves, working with a partner who has distribution already. Like those are the kind of avenues we're actively exploring in multiple jurisdictions around the world at the moment. We're trying to build the back end to be as performant and as maximally expressive as possible so that when those markets do open up, we can bring our stack to them and start competing with the traditional players.
Which market or markets are you most optimistic about when it comes to compliance? For example, in the US now, we have 2 bills to be approved by the Congress. Will those 2 bills help companies like yours to grow further?
Definitely, these are the kinds of things we're monitoring. That clarity helps a lot. We try and adhere to the spirit of these rules and how we build people. I'm sure, agree with that based on our track record. But for us, it's just having that pathway. If it's open, if it's there, and it's clear, we're happy to follow. And that's what we're waiting for, is that clarity. So we're watching it closely. I think it could definitely help. It helps on a broader sense with respect to how capital gets allocated in crypto. I do think there is almost a crowding out effect in crypto with market distortions. For example, we have a product that is a covered call on Ethereum. When you trade covered calls, you're selling upside on your ETH. It's a strategy used in traditional finance to generate 15, 20% or 10% of stablecoin yield on your asset. In our case, it's ETH. In the traditional world, it's like a stock. That is a much more difficult product to get to market, even though it is sustainable. In crypto, you have these often risk-free style deals that go around with token launches because people expect a token launch to be extremely successful, high flow, low FTV. That creates this kind of free yield for a lot of the capital in the space to post TVL to these protocols that are about to launch. Then it crowds out a lot of the sustainable yields and sustainable products that can actually grow and scale. So I think with clarity, it removes a lot of strange incentives that exist in the market and then allows capital to flow to products that are not a negative sum game. Maybe it's zero sum, maybe often it's positive sum if you're transferring risk around. So I'm optimistic. I expect it will come in 6 to 18 months. So we're watching closely and monitoring.
You have been operating in different jurisdictions. I know no US users will be allowed on your platform. What is your observation about the adoption of DeFi decentralized products in US and outside of US? It seems like before, US always pushed derivative products to other markets, especially for retail investors. They never like derivative products and they always try to get them out of the market. What is your observation? Is the market outside of US more open to such products?
I think that's historically been true. Obviously, the US has a successful, sophisticated financial system. A lot of people involved in that financial system make a lot of money from it, but it has been historically a little more resistant to change. I think that is changing fast, though. We're seeing this adventurous spirit come back to America, like the frontier spirit. And so we're watching really closely to figure out a way back into the US in a way that works, but it's not available at the moment. When this legislation comes, that might change. But yeah, it is a huge market. It's home to a lot of the world's best performing assets outside of crypto, various different equities and things, all of which I expect to come on chain in the next 12 to 24 months in a really meaningful way. Getting ahead of that curve, being ready to adopt this legislation and continuing to iterate on our tech stack so that it can handle not just crypto options, but also traditional options in the form of equity options or even FX options and various RWA options, oil, gas. These are the kinds of things I think we can begin to start listing over that period should regulatory clarity come and we get some high quality token issuers.
Let me ask you one thing about Trump's strategic Bitcoin reserve executive order. Do you think it's necessary and how would it impact the crypto market?
Yeah, I personally don't think it's necessary. It's something that's tricky to actually do when you have these presidential terms that are 4 years and that can change from administration to administration, right? Like one administration buys, the next sells. I don't necessarily think it's the best use of what the US government could be doing with crypto. I would expect a short-term bump if it gets adopted. I definitely think that Bitcoin is an excellent hedge against fiat inflation, as well as the demise of the dollar system. But I would be surprised if there was a strategic reserve almost for that reason. I don't think the US government would have an interest in flagging that they're concerned about the dollar stability at all.
What kind of sentiment do you see on your platform? What do those traders feel about the whole macro and crypto market?
Yeah, generally, if you're on chain and you're doing activities like trading, it tends to lean bullish. We've seen an uptick in the last 3-4 months of Bitcoin trading relative to ETH trading. There's been a lot of bullish bets on Bitcoin, not necessarily high volatility bullish bets, but steady grind up style price action bets in the form of long call spreads, sort of buying the 100K strike, selling the 120K strike. These are the kinds of things that we're seeing from traders on Derive at the moment. We'll continue to see the steady adoption of Bitcoin with all of these developments politically, geopolitically, globally, it is becoming increasingly a shelling point for global capital, and it has ways to go. Our traders are betting this, not in a violent upside kind of way, not in a headline grabby like 250K in a month kind of thing, but we're seeing those flows consistently now.
Mm-hmm. For this cycle, would it be similar to previous cycles that first Bitcoin will be dominant and then gradually the dominance will yield to altcoins, or this cycle will start to play out in a very different way from previous cycles?
It's a great question. I think we will see a difference to previous cycles. My guess is that there's going to be a lot more dispersion in crypto markets. Applications are going to be the winners of the next 4 to 6 years of crypto. Apps that deal with users directly. Applications, user-facing, teams like Athena, teams like Uniswap, Aave, people who are directly dealing with users are going to do well. The more infrastructure-heavy teams, I think, is going to be competed away, or at least the margins as close to zero as they can. I would expect applications that can onboard and create users and drive them to the rails we're building are going to do really, really well. And people who fail to do that are going to do poorly, which is different. And it sounds obvious, but that is different how the previous cycles have gone, where it's really just kind of narrative rotations or what's new and shiny versus what's tangible and long-term.
I think in previous cycles, the price change is more narrative driven. Now application is the key. If you just do protocol for protocol's sake, technology for technology's sake, it doesn't help anymore. People really look into all the details, how many users you have, how many revenues you generate. Truly agree. Nick, it's so wonderful to talk to you. I really enjoyed it.
This has been super fun.
Thank you for listening. Your support means the world to me. Share this episode with friends and family, and don't miss out on my newsletter, worldledger.substack.com, for the latest updates. See you next time. Bye-bye.